Hi, and welcome back to the Food Fund, where we analyze investing in food stocks. If you love food and love buying food stocks, beverage stocks, and restaurant stocks, you will love this channel. In this video we will be analyzing if Vita Coco stock is a buy. Vita Coco, stock ticker symbol COCO, is just one of many companies we explore on this channel. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Vita Coco. Vita Coco was founded in 2004, which makes them veterans in the relatively young space of alternative beverages. Best known for their namesake product, Vita Coco Coconut Water, the company expanded into other areas like sparkling water, coconut milk, and even coconut oil products. In 2020, Vita Coco took the plunge and entered the public market with an initial public offering. This move gave them access to a wider range of capital to fuel their growth strategy. Today the company is headquartered in New York and has operations in more than 30 countries. Now let's look at the price action. Starting with the 1-year chart, we see that Vita Coco had a CAGR of about 50%. Zooming out to the 5-year chart, we see that Vita Coco had a CAGR of 30% over almost 2.5 years. Vita Coco's share price has been a tremendous climber. If we perform a backtest comparison of investing $10,000 in Vita Coco versus the S&P 500, we find some strong results for Vita Coco. In that comparison with the S&P 500, $10,000 invested in Vita Coco would have grown to $23,366 or a 48% CAGR versus $11,038 or an 5% CAGR if invested in the S&P 500. This demonstrates tremendous outperformance for Vita Coco. However, a Vita Coco investment would have been more volatile with a 57% standard deviation versus 19% for the S&P 500. Vita Coco outperformed the S&P 500 in terms of the best year performance, for which Vita Coco grew 86% versus S&P 500 26%, and worst year performance where Vita Coco actually grew 2% versus the S&P 500 18% full. In terms of max drawdown, Vita Coco fell 32%, more than the max drawdown of 24% for the S&P 500. Vita Coco massively outperformed the S&P 500 in comparisons using the Sharpe ratio and the Sortino ratio despite its excess volatility. Now let's hop over to market share and take a look at Vita Coco's market share. Here we have the dashboard, where we can quickly gather a lot of information at a glance. Expanding the dashboard, we can look under beverage and see that Vita Coco is categorized as a non-alcoholic beverage. Expanding the non-alcoholic beverage tab, we can see that Vita Coco has the smallest market share but is growing. Let's look closer at the year-by-year changes in market share. So we come down here and type in the ticker symbol for Vita Coco and see that the market share is just 0.05% out of the publicly traded food, beverage, and restaurant stocks currently in the market. However, Vita Coco is growing pretty well. The 5-year market share CAGR for Vita Coco is 6.3%. If we start in 2019, we see that the market share was 0.038%, 0.041% in 2020, 0.042% in 2021, 0.043% in 2022, and rose to 0.047% over the trailing 12 months. Vita Coco is clearly taking market share from other beverage makers. Let's take a look at the fundamentals to learn more. Gross margin is 37%. This is on par with expectations. Revenue has compounded at around 15% over the past 5 years and has reached over $494 million most recently. For real, this is great growth. I'm in love with the Coco. Looking at cash flow, we see a 49% CAGR over the last 5 years for operating cash flow, while capex has actually improved at a 12% CAGR. As a result, free cash flow has grown at a 50% CAGR. Whoa, okay. This company has been producing operating cash and employs an extremely capital-light model as shown by the minuscule capex. This is beautiful. This leads to an almost complete pass-through of operating cash flow to free cash flow. Weighted average shares outstanding have grown slightly over the last 5 years, going from 57.2 million shares in 2019 to 58.7 million shares most recently. Vita Coco has had a bit of variability in their share count. The most recent trend is upwards, but hopefully this slows down. Given their massive free cash flow, it is surprising that share buybacks have not yet been instituted. I would be surprised if the share count does not shrink over the next few years. Now let's view return on invested capital. Return on invested capital has grown from 33.5% in 2020 to 44.3% in 2023. This is excellent. Vita Coco has become more efficient in driving profits from its investments, even though trend bottomed in 2022. Management is doing a great job. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from 73 days in 2019 to 96 days most recently, Vita Coco has gotten less efficient over time managing suppliers and inventory. This is really interesting as compared to improving operating efficiency as shown through the return on invested capital. Last, let's look at Vita Coco's debt. The net debt to EBITDA has fallen over the past 5 years, going from -1.2 in 2019 to -2.3 most recently. Given that the company is profitable, the negative value is good, and has been getting even better. The fundamentals of Vita Coco are pretty good. In any event, should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Vita Coco. It is a beverage company with a gross margin of 37%. The 5-year revenue per share CAGR is 15% and the 5-year free cash flow per share CAGR is 49%. This is excellent. Strong revenue and free cash flow growth coupled with a good gross margin. A return on invested capital of 44% is great. Next, the cash conversion cycle of 96 days is really high. I expected Vita Coco to have a low cash conversion cycle. It seems that their operational leverage is not in inventory control. Concerning debt, a net debt to EBITDA of -2.3 means that Vita Coco actually has more cash than debt. This is very good. So from a fundamental standpoint, Vita Coco is very solid. Now let's switch our attention over to valuation. Vita Coco is slightly overvalued relative to the S&P 500 with a ratio of 1.2. The price to earnings growth, or PEG ratio, is unable to be calculated presumably because not enough analysts are covering the stock to provide earnings projections. Vita Coco has had strong growth over the past 5 years as noted by its market share expansion. Margins and free cash flow growth are also good. The only area of concern I have is cash conversion cycle is being so high. Looking into the cash conversion cycle data a bit deeper, it seems that they are getting paid later from their customers and are paying their suppliers a bit earlier as well as holding more inventory. Better inventory control would impart improved economics for the company and may give them more leverage when negotiating with both suppliers and customers. There is really nothing bad to say about Vita Coco. I would expect the fundamentals at Vita Coco to improve even further as the company continues to grow. In my opinion, any big pullbacks might represent good buying opportunities. For me, Vita Coco is going on the watch list. Many thanks for watching. What do you think about Vita Coco and their strong growth? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.